Hi there. Today we're going to tackle a question that's been on the mind of many investors. Is rental real estate still a good investment today, despite the economic turbulence? I'm Bob Diamond, America's tax sale attorney and an experienced real estate investor. In today's market, investing in rental real estate in the right areas is a terrific idea, but you have to be investing in the right areas, and that means where the population is at a minimum stable, but ideally the population is growing, where jobs are coming into the area. Let's face it, even during rough economic times, jobs and people are moving, and the most important thing is you want to be on the good end of that activity, or as investors might say, the right side of that trade, meaning that you want to be investing in the right kinds of properties in the right areas, and those are areas where people and jobs are at least stable, but ideally increasing. Because then in those areas where jobs are increasing and people are coming in, you're going to get great tenants who can pay their rent. Rents are going to increase over time, sometimes very quickly, and property values are going to increase. Again, if you're in an area that's quick growing, property values can shoot through the roof and you can be the beneficiary of that. But if you're investing in the wrong areas or the wrong types of real estate, that will lead to terrible results and terrible losses. So let's talk more about the kinds of properties to invest in. I think that investing in residential real estate, homes and apartments as rentals, is the winning strategy right now because there is a housing shortage in America. We're around 5 million housing units short of where the country should be. And that is not an easy problem to fix because it takes time to get building permits. And in some areas, they make it really difficult to get building permits. And the developer has to also find financing, which in today's market has gotten very difficult and of course very expensive with the increases in interest rates. And on top of all that, there are labor shortages that make building very slow and very expensive. And our population in the United States is increasing and everybody needs a roof over their heads. And since right now we're in an economic downturn, rental units are extremely safe because when economic times are tough, people still need a place to call home. Sure, some folks might face financial struggles, but the demand for rental properties tends to stay pretty steady or even increase because more people rent than buy during a recession. And obviously, increased demand works in the favor of real estate investors like you and me as long as we invest in the right areas and the right properties. That increased demand means more potential tenants knocking your doors, which lets you pick the best tenants who are best qualified and will take care of your place and, most importantly, pay the rent. And of course, it's very important that you choose properties in areas where rentals are in high demand. Now, this is going to be cities with bustling and growing job markets, but look for things like educational institutions like universities and colleges, as well as near hospitals, because hospitals and universities are heavily staffed with well-paid workers. So those are really good areas to invest in, and those are places that anchor. You know, they're not coming and going, they're tending to grow if nothing else. When the housing market takes a hit, property prices drop, and today we have an additional problem. Less people are selling because they don't want to give up their house because their house probably has a 3% mortgage on it. And if they sell that house and buy another one, they really don't want to take on a 7% mortgage, which is what's available right now. So what we're facing right now is that the inventory of houses for sale is really at historic lows. Also, we have many investors who have snapped up properties for short-term rentals, such as Airbnb. And that has also reduced the regular rental property inventory as well as the homes that are for sale. You might say, well, this is great. It's a great time to have rental property, but how do I even get a good rental property in such a tight market? I've historically bought foreclosures, and there's still plenty of those happening, especially with the current economic downturn. I've also bought a lot of REO properties from banks. Now, REO means properties that the bank has already foreclosed upon and now has to sell. And I've also bought many properties at tax and mortgage foreclosure auctions. Now, with those foreclosure sources, especially the tax and mortgage foreclosure auctions, you can often scoop up properties at pretty good discounts. Not unusual to buy a property for 20 to 30% off retail in foreclosure auctions. That initially discounted purchase price could set you up for higher returns both on your month-to-month rents because you paid less for the property, so your costs are less. And it could also set you up that when the market bounces back, I'll just give you an example of this from my life. In 2009 and 2010, I was buying properties in Las Vegas. I wasn't living in Las Vegas, I've never lived there, but I became aware of an opportunity there and I jumped on it. I was buying REOs, meaning bank-owned properties, that had been, before the big downturn in 2008, $275,000 in value. But after that crushing downturn in 2008, I could get those properties for $75,000 on average, including what it cost me to fix them up. And generally they just needed some paint and carpet, so it's a very easy fix up. So I bought as many as I could buy, and because many people in Las Vegas forced to rent because of the economic downturn and mortgages were not readily available at that time, I was able to easily rent the houses for $1,300 a month to really well-qualified people who had good jobs and could easily afford the rent. Now, I made a couple $100s per month on each of those properties, and because the population in Las Vegas was increasing, after only a few short years, these property values, they went right back up to $275,000 on properties that I bought for $75,000 and made hundreds of dollars a month on them. It was fantastic. Many fortunes were made by many people during that, what you call market dislocation. And you know, the fast increase in Las Vegas was very predictable because Las Vegas had and still has strong employment, and it was a growing city that simply needed more housing. And housing wasn't being built because at that time there was a big meltdown. So sounds interesting, right? But of course that was back in 2009. So what's that got to do with today? What it has to do with today is that when you buy properties in areas that are growing, where jobs are coming in, your property is going to go up in value over time, and often very, very substantially. That's the tie-in with Las Vegas, because the opportunity is not the same today. What you want to look for is those fast-growing areas, because that's where your opportunity is. Now, you also may be groaning a little bit about rental properties. You may say, oh, rental properties, that's just a headache. And what you're thinking about is dealing with tenants and toilets at midnight on a Saturday night. What I want to tell you, big secret, you don't need to deal with tenants and toilets at midnight on a Saturday night. Here's the reason. There are professional property managers that can take care of all of that for you. They are the superheroes who handle all that work. They screen the tenants, they collect the rents, they answer the phone at midnight on a Saturday night, they do the maintenance, they get the plumber out there. So any issues that pop up, they take care of, even at midnight on a Saturday night. So having a reliable property management team, well, that makes the rental business excellent, low work, and high profit. You can focus on your life and focus in the business on getting the properties, getting them ready to rent, and they can handle the day-to-day time waster work after that property is rented. You're going to get steady cash flow, and they take care of the tenants' toilets and headaches. And those tenants are going to be happy campers if repairs are taken care of, and when they need something at midnight on a Saturday night, they can get it. So to sum it all up, investing in rental real estate during a recession is a great move as long as you select the right place. And the right place starts with the right cities, right towns, where population is coming in, jobs are coming in, and therefore values are going to be going up. And then within the market, look for good places where you're comfortable going and where people like to live. We have a housing shortage in America. That housing shortage is not going away. There are far too many hurdles that the government puts up to make development of new construction difficult, expensive. It's hard to get financing, and there's a shortage of construction workers to even build anything once you get those approvals. So I hope it brought you some clarity on whether rental real estate can be a promising investment right now, even during a recession. And do remember though, every investment comes with risks. So do your market research. In this market, that means checking jobs and employment coming in or leaving the area. You also have to select your properties carefully. Seek professional advice from home inspectors, from realtors who are in the market, from appraisers, some people who know what they're talking about in that market, and that will help you make informed decisions. Don't go cheap on your due diligence. Learn the market well before you invest. Thanks so much for joining me today. If you enjoyed this video and you found it helpful, give it a thumbs up, subscribe to my channel, and don't forget to hit the notification bell so you never miss my latest video. As always, happy investing. This is attorney and investor Bob Diamond wishing you a wonderful rest of your day.